After months of warnings from economists and analysts, new data released yesterday shows that for Q1 2022, Nigeria's debt servicing cost exceeded its revenue. What does this mean for Africa's largest economy? And as Nigerians are digesting this information, Nigerian bakers started a 4-day strike on July 21st. Also on the show today, the African debt conversation deepens as 2 more African countries fall into debt distress. Welcome to Business Edge. I'm Tolulope Adeleru-Balogun. African Business Headlines is up first. Zimbabwe is returning ownership of land seized during the fast-track land redistribution exercise more than 20 years ago. The move is expected to thaw frosty relations between Harare and Western capitals after Zimbabwe disregarded existing agreements. Foreign Affairs and International Trade Deputy Minister David Musabayana told local media that the government would also return the land that was owned by indigenous Zimbabweans. Now, despite admitting delays because of industrial action, the South African Revenue Service says it does not envisage changing tax season submission deadlines at this stage. In response to questions, SARS said taxpayers have had access to all digital channels to file returns during the strike. Provisional taxpayers must file their first estimation for the 2023 tax year and make a payment by the end of August. Non-provisional taxpayers must file their annual returns by October 24th. The World Bank has agreed to provide the United Nations World Food Program with $100 million from an emergency safety net project to address food insecurity in Sudan. The program, whose funding comes from the European Union, United Kingdom, Saudi Arabia, and several other Western nations, aims to provide 2 million Sudanese with cash transfers and food. And following the arrival of Somalia's newly elected President Hassan Sheikh Mohamud in Arusha to participate in the ongoing 22nd Ordinary East Africa Community Heads of State Summit, the country's application to join the East African Community Trade Bloc has been resubmitted. President Mohamud had earlier initiated the bid during his first term between 2012 and 2017, together with the Democratic Republic of the Congo, but members declined due to war and disorder in Somalia. And those are some of the African business headlines at this time. We will take a quick time out. When we come back, our first story today, a breaking story from just overnight in Nigeria and the details of what it could mean for the largest economy on the continent. Stay with us. Now, there will be many economists looking at their crystal balls and nodding their heads right now. That's because data on Nigeria's fiscal performance document released by the Minister of Finance, Budget and National Planning, Zainab Ahmed, shows that the country's debt servicing costs have overtaken its revenue. Nigeria's debt servicing exceeded the federal government's retained revenue in the first quarter of 2022 by 310 billion naira. The document also says that Nigeria earned 1.6 trillion naira and spent 1.94 trillion on debt servicing. While giving an update on the budget, the Minister of Finance said that urgent action is needed to address revenue underperformance and expenditure efficiency at the national and sub-national levels. Gospel Obele, the chief economist for Streetnomics, joins me now to look into this. Gospel, just a few months ago, we talked about the possibility of this happening, and while the when was partially the main question then, it really was something that many people believed was going to happen. So should anyone be surprised with the news that's coming out now? Gospel, I think you're muted. We can't hear you.
Yeah, hi to apologies. Thank you for having me this morning. I don't think anybody should be surprised. I think that we now begin to we need to begin to appreciate the risk of what we're dealing with, or the uncertainty of what lies ahead, especially when it comes to public finance and all that. And then we need to begin to do the right things now. It's not too late to start early, but with the way things are heading right now, we may just be heading for a an expenditure collapse.
So is the speed with which this happened, is it tied to the Russia-Ukraine crisis, or is there more to this? You know that Nigeria's revenues have been lower for a while now. We were producing 2 million barrels at one point, but the latest figures from OPEC put us at about 1.2 million barrels in June. We should have been able to take advantage of the higher oil earnings around the world at this point. So what do you think in particular, maybe it's not one thing, but a combination of many things, tipped the country over, particularly for the first quarter?
In my own opinion, I think it's largely there's a broad conversation around a long history of fiscal discipline, poor economic management, and very conflicting policies when you look at it from fiscal and the monetary bits. That said, yes, the Russian-Ukraine war may have contributed, but I mean, it contributed largely on the oil price dynamics and all that. But then again, it's not sufficient to put it on that. So it's a necessary conversation to say that it has been a fiscal mismanagement or an economic mismanagement in the sense. These challenges has been there before the Russia-Ukraine war, before the COVID-19 and all of that. And it just speaks to the fact that we've gotten to a point where the numbers are now reflecting the reality of things, in the sense. I mean, they've always reflected it, but, somehow some of our political actors have been trying to be politically correct with the numbers. But at some point, the reality of those numbers will outrun the need to be politically correct at the end of the day. And we're in a very dire situation. Do not forget, it's also a pre-election year. So there's a lot of pressure around recurrence and less around capital expenditure. Because like I mentioned in our previous outings, that what is economic reforms or what the government will spend on in a pre-election year is largely driven by what the political lenses or political priorities are. How I put it, as it determines largely around, how you build wins and be in the right books or in the good books of stakeholders. So that's what it's actually playing out here. And until we begin to look at the correct fundamental issues around budget structuring, what you spend on and why you spend, we may not have any lasting solution out of this, even if the Russia-Ukraine war ends now.
So one of the reasons that's been given for the revenue shortfall is that the NNPC has not been remitting revenue into the Federation accounts for about 8 months. And that's because they're claiming the NNPC has instead been paying subsidies on behalf of the federal government. So when you look at the movement of the money and the equation that's being presented, does it equal where Nigeria finds itself now?
With all due respect, I think it's a very lazy and irresponsible assertion in the sense, and I say this without confidence, and that's because if you look at the spread of the fiscal data and all of that, you realize that we even made much more money from the non-oil sector space, about double, how much, about close to 600 and something billion naira thereabout was made in that quarter from non-oil, and oil sector made half of that. So what it tells you clearly is that the focus and the potential is standing right in front of you. But you choose to focus your potential or something else on something completely different, which in this case, the oil sector. And it's very clear that it doesn't do us so much good. Even in the GDP spread, all right, you have almost 93% of the economy being run by the non-oil sector. So if you're doing that, if you look at that, plus the fact that you have more non-oil numbers flowing in as tax revenues and all that, it tells you clearly that if you can organize this market a little more, you'll be making way much more amounts of money that it would compensate for the loss in the oil and gas sector. So trying to pin everything on the oil and gas sector, on the NNPC and all that, I think at this point is a very responsible economic management conversation to make in the sense. So we need to look at what the bright side is. The fact that by default, we are making much more money from non-oil. We just need to organize the sector furthermore.
All right, so before we go for a break, let's talk about the Eurobond situation. And with every Eurobond has come the promise that the bulk of the money received would be used for a capital expenditure. But when we come back with the numbers, that doesn't seem to be what's happening. And just last week, members of Nigeria's Monetary Policy Committee questioned the government's reliance on funds from the Eurobonds as opposed to those from development institutions, which are typically a bit cheaper. So when you look at where Nigeria is getting some of its funding, some of its money to make up for the budget deficits, what do you think about the focus that Nigeria has on debt sourcing from Eurobonds and possibly not chasing other options? And we'll talk about another option later on in the show.
All right, great. I mean, your vision cannot be clear, to start with, when you've not properly defined what your problem is, or where you are at the moment, So take, for instance, now one of the reasons why Nigeria may have issues with ODAs and funding from other sources to start with is it has largely maximized, other funding sources. And the results over time have presented the results have not been impressive in terms of economic ability to scale, productivity, inclusion, prosperity, and capital expenditure and all that. So what the focus is now, we are looking for funding options that we can tie directly to capital expenditure. But if you look at the budget, there is a fundamental problem on what we even define as capital expenditure. There are overlapses. There are some capital expenditure items that are understood as recurrent items on the budget and vice versa. So technically, by the time you get those monies, and also being the fact that your institutional pipeline through which that money moves from point A to point B to execute is also broken, you begin to realize that there are a lot of leakages by definition, and there's a lot of leakages by structure. So at the end of the day, you cannot really make any good use of those funds. And, being that the cost of servicing those monies are high, you begin to incur more cost in the long term, than profits. Because in the first place, you have a definition problem, you have a structuring problem, and you have a returns issue by virtue of where those monies were plugged in finally.
All right, Gospel, we're going to take a break. When we come back, we'll ask the question about the subsidy, and we'll also look about the answers, because the minister did, of course, point out two possible solutions to this. And what does it really mean for Nigeria's economy in the long run? So do hold the line. News breaking yesterday that Nigeria's debt servicing costs have exceeded revenue for the first time. And it's a conversation that's being had across the country right now. And we'll continue our part of the conversation after the break. And Gospel Obele, Chief Economist for Streetnomics, is still with me as we look at the news coming out of Nigeria that debt servicing costs have exceeded revenue for the Q1 quarter of 2022. Now, the issue of subsidy also comes back up again. We've seen fuel prices increase this week in Nigeria to deal with global crude prices that are affecting the ex-depot price. Almost everyone has also agreed that subsidy must go. So what's the role that subsidy possibly plays in this situation? Subsidy is approaching an estimated 6.72 trillion naira for 2023, and that's according to the Minister of Finance. So, Gospel, when you look at the funds going into subsidy and looking at subsidy maybe gulping some 6.72 trillion naira by 2023, is there a conversation to be had about subsidy and where Nigeria finds itself right now with the debt servicing conversation?
Thank you, Tolu. In my own opinion, I think the subsidy conversation is a weak conversation. And it's a weak conversation because by design of how extractive institutions work, the government try to put the attention on social intervention, such that the focus is being taken away from the core problem in itself. Why do you have subsidy in the first place? Because you have an economic overly dependent on oil consumption. The largest stakeholders or markets who depend on PMS are households and businesses. All right, the average household spends almost 20 liters per week. Spends almost 5,000 to 10,000 naira per week. Now, if you fix power, number one, if you fix power, all right, at least by 50%, if you fix power by 50% at least, you have a situation where you have less households and less businesses depending on PMS to run their operations or run their household on a weekly basis. That's one. Secondly, if you fix the local refineries, it would also cut down on the pressure points along the value chain, all right, that sort of like hits up heavily on the pricing dynamics and all of that. So when you look at this holistically, the pressure is around the demand side. All right. And because your demand has outrun supply, you're now thinking of ways to subsidize the cost because, of course, price will definitely increase. So what we're dealing with is underneath the subsidy conversation is a long history of inability to fix your structural issues around power and local refinery systems. Now, that's why I said, first of all, the subsidy conversation is a weak conversation. Now, coming back to the subsidy conversation, yeah, there are conversations that subsidy must go. But if you take it out, once, if you take it out immediately, everything immediately, there is a conversation. There's also a fear that the increase in prices of fuel may affect the average Nigerian. Well, in my own opinion, it's already happening. So probably there are also perspective to, take out the subsidy subsequently as we go on. But technically, the subsidy is not a sustainable pathway, to fixing the core crisis, which is around power and local refinery production and all of that. So I think there is need to begin to hold government accountable on the core of what drives the economy. Subsidies don't drive the economy. Power and fixing industrialization and local production of all of these items is what would drive the economy in the mid to long term. And mind you, there are many illegal refineries that are running in some parts of Nigeria. So what stops us from looking for ways to turn those to, in quote, illegal to semi-formal blocks of refineries where you can take more and all that. So for me, the commission is much more complex, but the idea of subsidy itself is a weak conversation to keep the attention on the wrong thing, as it were.
All right. So beyond that, as I said earlier, there are options, possibly, maybe one would say, that are available to Nigeria. So in 2021, the World Bank launched the Debt Service Suspension Initiative, which would see official creditors commit to suspending payments of all principal and interest within a stipulated period of time. And while Nigeria is eligible for that, the country has refused to join the initiative. And many have said that if we had joined, it could have saved Nigeria some $342 million. So it's now a conversation about our creditors as well. Do you think Nigeria could find itself in a position of asking for debt forgiveness to an extent, or at least some kind of restructuring with those who owe, or who rather hold, Nigeria's debts? Where do we go from here with them?
This is not a sustainable process, as it were. And this is the reason why. In 2003, 2004, we were here. And it took Dr. Okonjo-Iweala a lot to sort of gain some 60% debt forgiveness from the Paris Club. So we've been here before. And if you read her book, Reforming the Unreformable, towards the end, she mentioned that she hopes and prays one day that Nigeria doesn't get to a point where the nation will require some form of debt forgiveness. But actually, we are there now, and we even surpassed, that position itself. So I don't think that is the way forward, looking for ways to forgive your debt. And I think Nigeria, or the economy as it were, needs to find a way to face its problem, which is you can have your debt forgiven, and you still have fiscal indiscipline and fiscal irresponsibility in place. You still have a structure that doesn't enable, for fiscal effectiveness. So sometimes the idea of extractive institution is also to create structures that empower the fiscal indiscipline and irresponsibility we find. Majority, almost 60% of Nigerian states are not commercially viable. They are not commercially viable. So if you look at that, that's already a lot of leakage block in the fiscal development process in the Nigerian economy. So whichever way you try to, either you seek for debt or not, we will still come back to this position. So we need to fix what the problem is, otherwise we're not going forward.
And let's talk about that, because we now hear that Angola and Gabon are in debt distress. They may be having conversations. We know that Zimbabwe and Zambia are in conversations as well with creditors and the international financial institutions. But when we look at this conversation, where do you place Nigeria now? Is Nigeria officially in debt distress? Because there are some who are saying we're just hanging off the fiscal cliff. Where is the country in your estimation?
I think we've been in distress a long time ago. It's just like saying there is Nigeria in recession. You don't need 2 quarters of negative GDP growth to tell me or to show the average Nigerian that we're already in a recession. Nigeria has been in recession for a long time. When you mismanage the economy and you roll out policies that directly hurt the spending and the living potential, or the aspirational potential of the average citizenry, you've put the person on at the recession level already. A lot of households are struggling to feed to start with. So these are very, very interesting and powerful things that we need to focus on. Otherwise, we'll find ourselves in a position where we keep spinning the narrative as though, it's, take for instance, at the beginning of the interview, you mentioned that the bakers community are on strike. Bread is already expensive, but why are the bakers community also on strike? So that is further going to increase the prices and all of that. And you need to see the numbers reflected in the food inflation subsequently. And you need to ask yourself, why is it that the central bank interest rate is not curbing inflation? Because these are structural, institutional fundamentals that withhold the economy. So I think Nigeria has been in debt distress a long time ago. When we started watching the numbers go up, when we started borrowing unnecessarily, and it being the fact that we have a structure to retain that irresponsibility is the problem to start with.
So going further on this, let's look at the solutions that the minister has talked about, and some you've already hammered on as well in terms of the fiscal indiscipline conversation. So Nigeria's Minister of Finance pointed out two solutions, and she said the country needs to address revenue underperformance and also improve expenditure efficiency. You've talked about fiscal indiscipline for Nigeria, where you've talked about the leakages and the subnational level, and we'll get to the states in just a moment. But how is this done? These are conversations we've had repeatedly. We've had these conversations. We've had this crystal ball sort of predicting that this was going to happen. This is not rocket science. Or is it, Gospel?
It is not rocket science, and I don't think Nigeria's revenue is underperforming. I think the focus has been steered in the wrong direction. The conversation has been oil. Nigeria's economy is already diversified. For those that are asking, it is already diversified. The problem we have is an active, sustainable, and productive, diversified revenue base. Very simple. And we're already seeing that right now, right? We're already seeing that right now. The non-oil taxes contributed more than the oil taxes, almost double what the oil taxes contributed. So that's to tell you by that the natural order of things, by having 93% of your economy on non-oil economic activities, which you also can't account for in details, because I feel like it's way more than that, but because our GDP methodology is another conversation for another day. Because we cannot account for those 93%, we cannot easily quantify the value in terms of revenue terms and all that. So until we begin to shift the focus from oil to enabling, you first need to organize, enable, and unlock the potential on the non-oil space. If you do that correctly, those numbers will hike, at a level you never imagined. So that is not revenue underperformance. That is the fiscal and the monetary authorities not gearing energy and focus right to where the money is and where it's really happening. And once you find that, you unlock it, and you just keep the process going to make more of that block and value chain. So we're not ready to pay attention. We're not ready to focus. I'm going to ask this question: how many non-oil export, non-oil revenue focus engagements have you seen the president and the block of ministers and speakers attending? How many of that? But this week, the new NNPC was unveiled and we saw all the stakeholders there. So that's to tell you where the energy and focus is, and it's a wrong energy.
So I'm going to ask you to bring out the crystal ball again now. So these figures came in for Q1 of 2022. I do hope that behind the scenes somewhere there's some scrambling and action that's going to take place. But what do you think the figures for Q2 are going to tell us? Will we continue on this trajectory?
I won't be surprised if it continues on this trajectory. Let's not forget also that in Q2, the fuel scarcity conversation worsened. The NNPC conversation was still, neither here or there, and there were a lot of restructuring that had to happen for the unveiling of the new NNPC and all that jacket. So there's been a lot of instability in the oil space. And guess what? Whether you're stable or not as an economy, you need to keep servicing debt. So the monies you're getting, that the little taxes you're getting and all that, you may end up having to service debt some more. Not really some more, but the differences will be, pretty clear now. And another thing I've also noticed is the fact that, even the capital expenditure for Q1 was less than half of the total amount of money used in debt servicing. That's a big problem going forward as a nation. And I don't think that this path is the right way to go.
All right, Gospel, we'll have to end the conversation there, but it's one that we'll continue to have, as we did have right before this. And we know we spoke in June when the World Bank actually said this would happen in 2026 and has already happened now in 2022.
It's already happening now. That's 5 years.
Exactly. All right, so we'll continue to have this conversation. Thank you so much for joining me.
Thank you for having me. Yeah.
And the report by the Minister of Finance also noted that underlying factors included, of course, the Russia-Ukraine crisis, which the report said had assumed a new and worrisome dimension. It was also listed that the resurgence of COVID-19 in some major economies, which is also leading to the slowdown of the economic activities, as well as renewed and elevated inflation, are some of those that could be accounting for where Nigeria finds itself. Q1 2022 debt servicing costs have now overtaken revenue in Africa's largest economy. This is definitely a conversation that will be demanding more attention in the coming days. You're watching Business Edge. When we come back, Lekan Onobanjo is standing by for international business news.
Glad to have you join us on international business news right here on Business Edge. I am Lekon Onobanjo. Now, foreign funds are showing signs of a return to Indian equities as recent declines in oil prices and the dollar bring some reprieve from emerging markets. Overseas investors have bought a net $1 billion worth of local stocks in the first 3 days of this week, according to the latest available exchange data. That puts them on course for the first weekly purchases since April. Meanwhile, Japanese investors cut holdings of overseas bonds for a record 8 weeks as Federal Reserve interest rate hikes and accelerating global inflation sapped their demand for foreign debt. Funds in the Asian nation offloaded a net 919.6 billion yen. That's about $6.7 billion of overseas fixed income securities in the week through July 15. The latest period covers the time when a U.S. government report published on July 13 showed the consumer price index climbed to a new 4-decade high of 9.1% in June, fueling expectations the Fed would step up its pace of tightening. Now, Asian stock markets are on course for their best week in months, and the dollar held off recent record highs after the European Central Bank raised rates for the first time in more than a decade, and bets on the size of U.S. rate hikes eased. Japan's Nikkei rose 0.24% on Friday and was on course to make gains for a 7th successive day. It is likely to be the index's best week since March, and MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.03%, but the index is set to set for its best week in about 2 months. Let's also tell you that strong travel demand has enabled the biggest U.S. airlines to return to profitability, but efforts to restore capacity back to pre-pandemic levels face manpower and cost challenges. For the first time in the COVID-19 era, both American Airlines and United Airlines reported profitable quarters without the benefit of government support programs. American Airlines revenue surged 12% compared with the same quarter in pre-pandemic 2019, reaching $13.4 billion in the April to June quarter, the most ever. Delta's revenue jumped 10% to $13.8 billion, while United's rose 6% to $12.1 billion. But all three carriers are running fewer flights than they were in the period, with Delta off the most at 18%. And those are the stories that we have for you on the international stage that is talking business. I tell you, the conversation will continue on Business Edge, so stay with us. When we return after the break, we'll take you through the next talk.
Bread is one of the world's staple foods, and from country to country and continent to continent, bread is for everyone of all socioeconomic classes. But the staple looks to be an endangered commodity in Nigeria. Bread makers in the country began a 4-day strike action on Thursday over the rising cost of baking materials. Members of the Premium Bread Makers Association of Nigeria say that operating a bakery in the country has become near impossible, and that economic conditions have rendered the industry comatose. The strike is meant to last for 4 days in the first instance, but the association says if government doesn't respond, it could be extended for an indefinite period of time. News Central's Bettina Nwele has this report on the story.
Bread is one of the staple foods in Nigeria and around Africa. For some families, it's almost an essential commodity because at every point in time, there must be bread in the home.
It's not easy because of the inflation in price of every single thing we are using. It's not easy at all, but at least we are trying.
Bread makers nationwide have decided to put a pause on their services as they believe that is the only way to gain the attention of the Nigerian government to the plight that they currently face. The reasons for their strike have been stated as incessant increase in the price of baking materials, a request to the federal government to stop charging the 15% levy on wheat imports, a request to NAFDAC to review downwards the 154,000 naira penalty charged on bakeries for late renewal of certificates, among others.
The butter that we use has also increased because I know when I joined in April last year, we always buy that butter at the rate of 9,000. That same butter now is now 21,000.
For
For a bucket. Another alternative for that butter that we use is the carton. There's a carton butter now, which these people always do. The butter goes for a 15 kg because the bucket one that I'm telling you from 9,000 to 21,000 is 10 kg, but this one now is 15 kg. Now, when I started buying it, as at last 3 months, the butter was at the rate of 16,000. That same butter now is down 20,000. Sugar too. Sugar now, at least when I started this work, I was buying sugar for like 11,000. Now the same sugar now is now 26,300.
Over 40 bakeries have shut down in the Federal Capital Territory over high production costs. To ensure the survival of the deluxe bread-making industry in Nigeria, authorities need to take action as where no intervention from the government is recorded. The bread makers say there will be no going back on the withdrawal of their services. Bettina Nwili, reporting for News Central Lagos.
And that strike kicked off yesterday. Now, not everyone has joined, but there are a large number of bakeries that have joined across Nigeria. And just to reiterate, the Premium Bread Makers Association of Nigeria has the following demands from the government. They include government removing the 15% wheat development levy on wheat imports, NAFDAC reviewing the 154,000 naira penalty for late renewal of certificates. They also want to stop multi-agency regulation on the bread-making industry. And even though the cost of production has increased, a lot of this seems related to regulation. And yet another demand is that they should also receive access to grants and soft loans being given by the Central Bank of Nigeria to minor, small, and medium-scale enterprises. Lekan Onobanjo is joining me now. When you hear about this, I've been hearing people talk about it on radio. I myself have experienced it from about 450 now in my neighborhood to about 800, 900 now. What's the cost of bread in your neighborhood, Lekan?
In my neighborhood, well, for the ones that we usually buy for 400, 450, it's now between 550 and 600 now. And at one time, I had to engage the seller. Why the increase? And he said, of course, everything in the market, the prices of everything have gone up, and there's nothing they can do about it. So when you have this sort of inflation and hike in prices of foodstuff in the market, definitely it is the consumer that would have to bear the brunt. And that calls to question what the government is doing, because we understand that inflation cuts across all the continents. So many countries all over the world are going through the situation right now, but then there's some situations that are peculiar to certain countries. And when you understand the situation around you, then of course you don't need to be laid back. You need to be proactive in most instances so that you can cushion the effect and try to manage the economy so as much as it does not bring about a heavy turn on the people.
And I also do have fears because we've seen that the cost of bread can actually be tied directly to protest in some parts of the continent. And so you have that situation as well that's at the back of many people's minds. I don't think that's only at my own. But let's look at this regulation issue. 15% levy on wheat imports, 154,000 naira penalty for late renewal, as well as multi-agency regulation. We know that's something that a lot of small and medium-scale businesses in Nigeria complain about. Taxes from local, state, and federal agencies coming at different times, threatening to lock them up and even locking them up as well. So these issues seem to be tied more to regulation, and then you add the current global economic situation to it. When it comes to regulation, what do we think? They say they've been trying to talk to governments. I don't even know what to say, because I know there are a lot of people this morning that could not give their kids bread. The weekend is coming. It's going to be difficult for some people. So where is government in all of this? Because they've said government has not been responding to their calls to have conversation.
Well, basically, Tolu, that's where the problem is. When you have a government that is not listening and is not responsive to the plight of the people, then we have to be at this crossroad. And when you talk about regulations, of course, it's something that has to be done, because when you do not regulate the prices of commodities in the market, when you don't regulate the economy, when you don't have regulators standing on their toes to do their bids, then you have volatility and you have people with different prices and impunity coming into place and destabilizing the economy. And that is what happens. So it is very, very important at this time that the government sits down with the players in the industry, not only in the bakery industry, in other sectors of the economy, and look at the problems critically and say, let's be drastic about the solutions that we can bring out, solutions that are visible, solutions that can bring about a change, and solutions that will not further choke the citizens, because at the end of the day, it is the citizens that get to pay more. It is the sellers, it is the vendors that would have to, of course, when you have VAT increases, in this case, you know, they transfer that to the consumer, and you have that kind of tension, that economic tension running around, and people trying to survive in the midst of little. So this is about time that everyone needs to come to the table, sit down and discuss and see how they can be sincere in terms of coming up with solutions rather, that can better change the situation.
So one solution they've been saying is let's change what we put into bread. Some have said that instead of waiting for wheat from Russia and Ukraine, let's look at different raw materials like sweet potato. So does sweet potato bread interest you, or maybe cassava bread? We saw that initiative come up under a previous administration here in Nigeria. I did give it a try at one time. It's more of something that will take getting used to, because our taste buds are so accustomed to wheat and flour that comes from wheat. But could those be options for us?
Yeah, of course, it could be options, but then how sincere is the government? Because I remember the last time that they launched the cassava bread, a lot of speculations on that. How many of the government officials that were part of those that launched the cassava bread actually consume that kind of bread? So when you are coming up with a policy, you need to walk the talk. You need to lead by example. If you're saying people should go by the way of cassava bread or potato bread, you are putting down the modalities, you are supporting them in everything that you can within that space, and you are also consuming such. So when you lead by example and people are able to embrace such, then they see the benefits, knowing fully well that you are also leading by example.
All right, it's a situation we'll be following. It is ongoing. They said the warning strike is a 4-day one, kicked off on July 21st, which was yesterday. And the weekend is going to be quite interesting and probably difficult for a number of Nigerians. But let's see what happens. But they have threatened that it could become an indefinite strike if government does not sit down with them and talk through their demands. So we'll be following that very closely. Leka, I'll hand you back at the center stage, of course, for NC4 to watch.
All right, let's quickly take you through NC4 to watch, even as we look at the stories that are trending in the business world. Let's start by telling you that after the International Monetary Fund imposed a new loan condition requiring Kenya to end the fuel subsidy scheme by October, fuel prices are anticipated to soar. In the list of measures included with our $2.34 billion loan package, the multilateral lender has included the elimination of the subsidies provided under the 38-month budget support scheme. Now, Ghana lawmakers approved a plan by the government to borrow up to $750 million from the African Export-Import Bank for the 2022 budget. The vote by the nation's hung parliament removes a major hurdle for President Nana Akufo-Addo's government to press on with budget projects and stabilize finances after losing access to the international capital markets this year. Egypt's economy will grow fairly steadily over the coming 3 years, with inflation gradually declining from double digits and the pound weakening in the near term, a Reuters poll has shown. Gross domestic product is forecast to expand a median of 5.5% in the fiscal year that began this month, according to the Reuters poll of 19 economists taken July 6 to 20, up slightly by 5.2% predicted 3 months ago. And finally, the United States has thrown its weight behind Zimbabwe's debt plan, with Washington urging Harare to undertake economic and political reforms. Zimbabwe has appointed an African Development Bank Group President, Akinwumi Adesina, to lead the process as Harare seeks to resolve its $14.4 billion external debt. Now, Adesina has visited Zimbabwe last week, where he met President Emerson Mnangagwa, senior treasury officials, the private sector CEOs, and development partners to listen, understand, and appreciate what needs to be done and how they can get to that point. And that's all on NC4 to watch. Tolu will wrap up the show now.
Thank you so much, Leka, and that's how we wrap things up. Don't forget to follow us on social media. We are at News Central TV. You can also, of course, download our mobile app and subscribe to our YouTube channel and watch us on the platforms we are available. Don't forget, make it a date with us, 11 a.m. Monday through Friday, right here. We put African business, finance, and the economy front and center. I'm Tolulope Adeleru-Balogun. After what I hope has been a profitable week, hopefully have a restful weekend. We'll see you again soon.